anong topic? Techniques in the calculation and allocation of goodwill. Pati pala gain, ano? Ila-allocate them. Let us see how to compute for the allocation after computing for the goodwill and gain. Now, the next is topic on yung binibiling subsidiary, baka bago bilhin, eh meron ng goodwill yung subsidiary. Now, alam naman natin kapag nagkabilihan na for business combination, kapag may goodwill yung subsidiary bago magkaroon ng business combination, i-ignore yun, no? Kasi yun ang non-identifiable asset, goodwill. And then, at the end of the at the later portion of the evening, step acquisition. Step acquisition. Ito yung parang by installment, ano? Okay. And there are two methods to in the step acquisition. One is using the original IFRS 3, and the other one, the revised. Okay, so Caris, you may start. Caris.
Okay na po.
Ang ganda. Yan. Ganda.
Good evening, everyone. This is the techniques in the calculation and allocation of goodwill and or gain on acquisition. The following are the steps that will always work if used in the order shown below. With goodwill, assume the price paid by the parent is 600,000. Step 1, enter the value for column A2, sum of fair values of company's net identifiable assets, then after appropriate percentage of that value into column B2 and C2. These amounts are fixed regardless of the price paid by the parent. A1, company fair value, wala. B, company fair value, wala din. At saka C, kasi kukunin pa natin sa step 2. Fair value of net assets, excluding goodwill. A, company implied fair value is 620,000. Parent price 80%, 496,000. NCI value 20%, 124,000. Goodwill, wala pa. Step 2, enter the price paid by the parent for the controlling interest in B1. Sa step 2, ilalagay na natin yung assume the price paid by the parent, yung 600,000. Company fair value of A, company implied fair value is wala. B, parent price 80% is 600,000. Yun yung price paid by the parent na i-assume. C, NCI value 20%, wala din. Number two, fair value of net assets excluding goodwill is 620,000 for A, 496,000 for B, and 124,000 for
The
C.
Sir Perez
Goodwill,
Christian. O bakit
opo.
Perez? Why? Perez?
Sir, napindot lang po, sorry po.
Ah, kala ko may tanong ka. O sige, continue.
Step 3. Compare B1, the price paid by the parent, and B2, the parent's share of the fair value of the company's net identifiable assets. If B1 is more than B2, enter B3 the difference, which is the goodwill applicable to the parent. Ito yon. Yung company fair value of B parent price 80% of 600,000 less ng fair value of net assets excluding goodwill of 496,000, ang magiging goodwill ng parent price 80% is 104,000. Then complete C1. Normally, this amount will be proportionate to B1. It can be different amount based on estimated fair value but never less than C2. In this case, it is assessed to be 180,000 even though the proportionate value would be 150,000 for this example. Compute now the value of C3 and complete the remaining columns. A company implied fair value company fair value is 780,000. Paano nakuha yung 780,000? Yung parent price 80%, 600,000, add the NCI value 20% of 180,000 kaya naging 780,000. Fair value of net assets excluding goodwill, company implied fair value A 620,000, B parent price 80% 496,000, and CI value 20% 124,000. Goodwill 780,000 less 620,000 worth equals of 160,000. 600,000 of company fair value of B, fair value of net assets excluding goodwill less 496,000 is 104,000. 180,000 of company fair value of NCI value 20% less fair value of net assets excluding goodwill 124,000 is equals to 56,000. Must be more than 124,000 and can be different than the proportionate value of 150. 600 divide 80% times 20%. With gain on acquisition naman tayo, assume the price paid by the parent is 450,000. Yung kanina 600,000, ngayon naman 450,000 kasi nasa gain on acquisition na. Step 1, enter and allocate fair values. A company implied fair value of 1, company fair value none, B parent price 80% none, C and CA value 20% none. Fair value of net assets excluding goodwill of A company implied fair value of 620,000, B parent price 80% of 496,000, C and CI value 20% of 124,000. Gain on acquisition, wala pa. Step number 2, enter the price paid by the parent. Dito na ilalagay yung a-assume natin na price paid na 450,000 sa parent price 80%. A company implied fair value of company fair number 1 company fair value is none, parent price 80% is yung 450,000 na i-assume. C and CI value 20% none. Fair value of net assets excluding goodwill, A company implied fair value 620,000, B parent price 80%, 496,000, and C NCI value 20% 124,000. Gain on acquisition dito sa makukuha natin to sa step number 3. Calculate the gain applicable to the parent B2 is more than B1 and complete the remaining columns. Ibig sabihin yung parent price parent price 80% fair value of net assets excluding goodwill is mas mataas kay B1 dun sa company fair Ay, yung mas mataas pala yung fair value of net assets excluding goodwill kaysa kay company fair value ng parent price. A company implied fair value of company fair value number 1 is 574,000. B parent price 80%, 450,000. NCI value 20%, 124,000.
Oh,
Hindi pa po, sir.
tapos na. May tanong ako,
Makukuha yung
Mary.
company, sir, hindi pa po.
Ah,
Company implied fair value, nakuha siya, i-add yung parent price na 450,000 at saka yung 124,000. Same lang dun sa goodwill. Two fair value of net assets excluding goodwill 620 for company implied fair value, parent price 80% 496, NCI value 20% 124,000. Gain on acquisition 574,000 less 620,000 is 46,000. 450,000 less 496,000 is 46,000 negative. 124,000 less 124,000 is 0. Take note that C1 cannot be less than to C2. If the pair value of the NC1 exceeded 124,000, the excess would be an offset to the gain on the controlling interest. To illustrate, assume the NCI has a pair value of 130. A company implied fair value 580,000, B parent price 80%, 450,000, C NCI value 20%, 130,000. Fair value of net assets excluding goodwill 620 for company implied fair value, 496 for B, 124,000 for C. Same lang din, less 580,000 less 620 equals negative 40,000. 450,000 less 496,000 equals to negative 46,000. And 130,000 less 124,000 is 6,000. The working paper elimination entry to allocate the excess would be in negative I debit investment in S company of 46,000, credit NCI 6,000, and retain earnings P company gain on acquisition of 40,000.
okay. Tapos na yun.
Opo.
Ah, so, it's very interesting yung portion na pinakita mo sa amin na ano, you have shown us a case wherein nagkaroon ng gain on acquisition, tapos nagkakaroon ng allocation ang NCI, ano? And that happens when the yung comparison, ano, kung may fair market value bang ibinigay, fair market value ng NCI, tapos ikukumpara mo doon sa proportionate share ng NCI sa net identifiable assets ng subsidiary stated also at fair value. So, I don't know, you have shown us a case where a gain is allocated between the acquirer and the LCI, or the controlling interest and the non-controlling interest. Okay, Russ, do you have any question before we leave the topic and go to the next topic? This is about subsidiaries pre-existing goodwill na our knowledge na nakuha natin much earlier. Ito nga, no? Kung before the business combination, merong goodwill ang subsidiary, pagdating sa business combination, ini-ignore ito, no? And whatever new goodwill na coming out of the computation, that is the goodwill for the consolidated entity. Huh? Consolidated entity. And hindi yun sa libro ng parent company. Kasi ang parent company, kahit pa mayroong consolidation, nag-maintain pa rin yun na separate parent books. Okay. So, si Rose Ann, ano ba ito? Subsidiaries pre-existing goodwill. Okay. You may start.
For the
Mapapalaki,
continuation,
mapapalaki pa yan. Oh.
ano po,
Oh, sige. Okay. Go.
for the subsidiaries pre-existing will, it only entails that if a goodwill is already allocated at the book of the subsidiary that is being acquired at the time of acquisition, this only means that it will be ignored considering the computation and allocation of excess. For the illustration, assume the ex- sample example involving the 80% acquisition of S company in case 4 on page 78. Assume further that S company in its statement of financial position on page 77, the illustration 14-8, has a goodwill of 50,000 pesos and the retained earnings balance is 170,000 pesos. The revised statement of financial position of S company on the date of acquisition would be as follows. For the assets, accounts receivable have a 40,000 pesos book value and a 40,000 pesos of fair value. For inventory, it has 100,000 book value and the 110,000 fair value. Assets, that is land, has a 80,000 book value and 130,000 fair value. For the buildings net, 300,000 300,000 book value and 500,000 fair value. For the equipment net, it has a book value of 80,000 and a fair value of 120,000. And lastly is the goodwill that has a 50,000 book value with a total assets of 650,000 per book value and 900,000 per fair value. Pababa po. For the liabilities and equity, accounts payable has a book value of 80,000 and a fair value of 80,000 also. Bonds payable has book value and fair value of 200,000 pesos with a total liabilities of 280,000 pesos for both book value and fair value. For the stockholders' equity, common stock of 1 peso par has 20,000 book value, additional paid-in capital of 180,000 book value, and the retained earnings of 170,000 book value with a total equity of 370,000. For the net assets, we can get it by subtracting the total assets and the total liabilities. For the book value, we can get net assets of 370,000, while in fair value, it has 620,000 net assets. Next, assume that P Company issued 16,000 shares of its 10 peso par value common stock for 80% of 16,000 shares of the outstanding shares of S Company. The fair value of P Company stock is 50 pesos and the fair value of the 20% NCI is assessed to be 200,000 pesos. P Company also pays 50,000 pesos in professional fees to accomplish the acquisition. P Company would make the following entries. Number one, to record the acquisition of S Company stock, it has a journal entry of debit investment in S Company of 800,000, credit common stock of 160,000, and additional paid in capital of 640,000. Second, to record the acquisition related cost above the- it has a retained earnings of P Company that is 50,000 pesos and a credit of cash 50,000 pesos. For the computation and allocation of the goodwill, the company fair value has a total fair value of 1 million, a parent price of 800,000, and the NCI value of 200,000 pesos. While in fair value of net assets excluding goodwill, it has a total fair value of 620,000, a parent price of 496,000, and an NCI value of 124,000. To get the goodwill, we will to get the goodwill, we will less the fair value of net assets excluding the goodwill to the company fair value. That will get us the total fair value of 380,000, a parent price of 304,000, and an NCI value of 76,000 pesos. The determination and allocation of excess schedule is as follows. Fair value of subsidiary has a total fair value of 1 million, parent price of 800,000, and an NCI value of 200,000 pesos. Last, book value of interest acquired. Common stock has a total fair value of 20,000, additional paid-in capital of 180,000, retained earnings of 170,000, with a total equity of 370,000. To get the book value, we will multiply the total equity to its percentage. For the parent price, we will get 296,000 book value by multiplying the 370,000 to 80%. While in NCI value, we will have a book value of 74,000 by multiplying the 370,000 to 20%. For the excess, we will get it subtracting the by subtracting the book value to the fair value. That will get us 630,000 total fair value, 504,000 for the parent price, and 126,000 for NCI value. For the adjustments of identifiable accounts, inventory has a fair value of 10,000, land has a fair value of 50,000, buildings have a fair value of 200,000, and equipment has a fair value of 40,000, with a total of 300,000 pesos. That will give us the goodwill of 330,000 pesos. We will get that by subtracting the total adjustment of identifiable accounts to the excess, which is 630,000 minus 300,000 pesos. Next. For the working paper elimination entries based on the D&A of excess schedule are debit common stock of S company 20,000 pesos, debit additional paid in capital S company 180,000 pesos, and the retained earnings of S company 170,000 pesos. A credit of investment in S company 296,000 pesos, and the credit non-controlling interest of 74,000 pesos. For the second journal entry, debit inventory of 10,000 pesos, land of 50,000 pesos, buildings of 200,000 pesos, equipment of 40,000 pesos, and the goodwill of 330,000 pesos. Credit of investment in S company 504,000, and non-controlling interest of 126,000. Next. Next is the consolidation paper working paper with the corresponding changes is as follows. For the assets, cash has 168,000 pesos for P company and zero for S company. Accounts receivable have 144,000 for P company and 40,000 for S company. Inventory has 160,000 for P company and 100,000 only for S company. Land that has a value of 200,000 for P and 80,000 for S company. Next is building of 840,000 for P company and 300,000 for S company, followed by the equipment that has a value of 400,000 for P company and 80,000 for S company. And the investment in S company that will have a value of 800,000 pesos for P company, with a total goodwill of 50,000 for S company only. For, for the debit and credit of the assets, in an inventory, we will have 10,000 debit, 50,000 debit for land, 200,000 pesos debit for building, and 40,000 pesos equipment for debit, and a credit of 296,000 and 504,000 for investment in S company. For the consolidated, we will have a cash of total of 168,000, accounts receivable of 184,000, inventory of 270,000, building of 330,000, equipment of 1,340,000, and investment in S company of 520,000. For the goodwill, we will have a consolidated amount of 380,000. For the total assets, P company has a total assets of 2,712,000. S company has 650,000 total assets, while in consolidated, it will have a total of 3,192,000. For the liabilities and equity, accounts payable has an amount of 160,000 for P company and 80,000 for S company. Bonds payable has a value of 400,000 for P company and 200,000 for S company. For the common stock, P company has a 560,000 while S company has 20,000. In additional paid in capital, P company has an amount of 1,140,000 while S company has 180,000. For the retained earnings, P company will have a 452,000 pesos while S company has 170,000 pesos. For the NCI to consolidated, it will have a debit of 74,000 and 126,000 pesos. For the consolidated, accounts payable will have a total of 240,000. Bonds payable will have 600,000. Common stock will have 560,000. Additional paid in capital will have 1,140,000 and the retained earnings of 452,000. And lastly is the NCI to consolidated equals to 200,000 pesos. With a total of 2,712,000 for P company, 650,000 for S company, a debit of 1 million and a credit of 1 million also. And lastly is the consolidated that has an amount of 3,192,000 pesos.
Okay. Tapos na yon. Oo. So, now, kitang-kita natin sa screen na yan, NCI to consolidated. Hindi na bine-breakdown kung magkano ang common stock, additional paid in capital, at retained earnings, no? Uh, Lump sum, nakikita the interest of the non-controlling interest. Okay, so okay, we leave the topic and go to the another topic. That is a very good reporting, very good reporting. Now we go to the next topic, the step. Now this is a very interesting one, Okay, you may proceed the step. Ito ata yung parang ini-installment yung yung acquisition by acquirer sa acquiree. Parang ini-installment O sige, sige. You may start.
Step acquisition. A business combination may involve more than one exchange transactions. That is when there are successive share purchases. This is often known as a step acquisition where the purchases of blocks of share in an investee are made at different points in time. So, sinasabing ang business combination ay hindi lamang involved sa isang sa transaction pero pwede ding more than one if merong succeed share purchases. In the following sentence, it is said that step acquisition is a business combination kung saan si acquirer nag-obtain ng control over an acquiring within the multiple transaction. So, why is it called a step acquisition? It is because, for example, it's possible for the acquirer to acquire only less than 51% of the majority of the shares of the acquiree, and then later on added another certain percentage up to the point na it achieved the majority of 51% and above. The additional blocks of shares are purchased from other shareholders either through the open market if the investee is listed or through private arrangements if the investee is unlisted. Through open market or the shares which are tradable and can be bought in PSE, for example. While the unlisted market naman are those tradable but in private manner or can be bought over the counter. Examples are the corporate bonds or the government securities. As such, there is usually no change in the equity capital of subsidiary. The original IFRS of 2004 required that when a business combination involves more than one exchange transaction, that is, when it is achieved in states of successive share purchases. A. The cost of combination is the aggregate cost of the individual transaction, or it is the amount of all transactions made. Or B. The date of exchange is the date of each exchange transaction. That is the date that each individual investment is recognized in the financial statements of the acquirer. Whereas the acquisition date is the date in which the acquirer obtains control of the acquiree. Yung date na exchange is the exact date ng transaction. Or this is where the acquirer rather take control of the acquiree, or this is the closing date kung saan ita-take over na ni acquirer yung control from the acquiree. The original PFRS 3 further required that each exchange transaction shall treated separately by the acquirer, using the cost of transaction and the fair value information at the date of exchange transaction to determine the amount of any goodwill with the transaction. This resulted in step-by-step comparison of the cost of the individual investment with the acquirer's interest in the fair value of the net assets at each step. In the original PFRS 3, required na lahat ng transaction made for exchange ay separate kay acquirer with the use of cost of transaction and fair value at the date na naganap yung exchange para malaman yung goodwill within the exchange transaction. In other words, it was then necessary to compare the cost of investment of each block of shares purchased with its share of the underlying net assets of the subsidiary at each transaction date. This is the goodwill in a step. Acquisition was determined on a piecemeal basis. The goodwill determined for each of the various steps was then aggregated for the presentation of the consolidated statement of financial position. Mm. In other words daw po, kinakailangan na ipagkumpara ang cost of investment of each share purchase na pinagbabatayan or pinagbabasehan ng net assets ng subsidiary at each transaction. That is the goodwill na nakuha sa piecemeal basis acquisition. Piecemeal basis is yung series of transaction na naganap sa pag-acquire ni acquirer kay acquiree. So lahat ng goodwill na na-determine or nakuha ay pagsasama-samahin para sa presentation ng consolidated statement of financial position. On next topic, for valuing previously held stake. The revised IFRS 3 of 2008 requires that in a business combination achieved in stages, the cost of combination shall include any entity interest in the acquiree that the acquirer owned immediately before the acquisition date. So under the revised IFRS 3, required naman na ma-include ang mga entity interest in the acquiree that the acquirer owned immediately before the acquisition date. This can be called as purchase consideration, wherein ito yung fair value ng lahat ng interest na acquire na ni acquirer. It further requires that the acquirer shall remeasure its previously held equity interest in the acquiree at fair value as of the acquisition date. If si acquirer ay may hawak na interest na bago pa ang acquisition, revised IFRS 3 requires na i-remeasure muna ito sa fair value ng date of acquisition or sa date of closing or sa date na nakuha na ni acquirer ang control kay acquiree. Consequently, any gain or loss arising on the remeasurement of the previously held equity investment shall be recognized in profit or loss. Lahat ng gain or losses na makukuha from the remeasurement ng mga previously held investment ni acquirer ay kay acquiree ay mare-recognize sa profit or loss ni acquirer. For example, if the equity interest immediately before the acquisition date was an associate carried in accordance with the IAS 28, cost plus share of post-acquisition reserves, that carrying amount shall be remeasured to fair value at the acquisition date, and any difference shall be recognized as gain or loss in profit or loss. Similarly, if the previously held equity interest was a financial asset measured at cost, because its fair value then could not be measured reliably, that cost carrying amount shall be remeasured to its fair value at the acquisition date, and any difference shall be recognized in profit or loss. As previously discussed, under the revised IFRS 3, when there are previously held equity interests at the date controlled is obtained, the goodwill on combination is calculated as excess of A over B below. A. The aggregate of first, the fair value of consideration transferred. Second, the amount of any non-controlling interest in the acquirer measured at fair value or at the non-controlling interest share of net assets, and the acquisition date fair value of the acquirer's previously held equity interest in the acquiree. A note, non-controlling interest, ito yung mga minority interest or ito yung mga investor na nagmamay-ari ng less than 50% of the acquired entity or ni acquiree. B. The net of the acquisition date amounts of identifiable assets acquired and the liabilities assumed. Thus, instead of a step-by-step comparison of cost of purchase with share of net assets under the original IFRS 3, to determine the goodwill on each step, the goodwill on combination under the revised standard is calculated only once. That is at the date control is obtained, and this may include non-controlling interest share of goodwill. For the illustration, P Incorporation made the following purchase of equity shares in SE. On January 1, 2015, the number of shares will be 10,000, cost 15,000, and the balances in retained earnings is 20,000. On January 1, 2016, it made 15,000 number of shares, 40,000 cost, and 30,000 balance in retained earning. While in January 1, 2017, number of shares of 30,000, cost of 75,000, and balance in retained earnings of 50,000. To sum it all, the number of shares of na purchase kay S is 55,000, while the cost of that purchase will be 130,000. The summarized statement of financial position of two companies for the year ended December 31, 2017 are as follows. Property, plant, and equipment for P Incorporation is 200,000, while S is 100,000. Investment in S Incorporation is 130,000. The current asset for both incorporation is 70,000 and 150,000 respectively, with a total of 400,000 and 250,000. The common shares of 1 pesos each of P is 200,000, while on S is 100,000. Retained earnings of 120,000 and 80,000. Current liabilities of 40,000 and 50,000, and the non-current liabilities of 40,000 and 50,000, with a total of 400,000 and 250,000. In prior years, P Inc. had no influence in S Inc., and the investment in S Inc. was measured at cost because its fair value then could not be measured reliably. On January 1, 2017, P Inc. assumed the control of S Inc. It is the policy of the group to measure non-controlling interest at acquisition date fair value on January 1, 2017. The fair value of common shares of S Inc. was 250 per share. Goodwill on combination. Based on the data on page 94, the goodwill on combination is computed as follows. Cost of purchase for January 2015 is 15,000. For January 1, 2016 is 40,000. For January 1, 2017 is 75,000. These cost of purchase are given in the illustration above. Share of net assets, share capital of 100,000 for each year respectively. A common shares in S-Sync which is yung 100,000. The pre-acquisition profits of 20,000, 30,000, and 50,000 respectively. Ito yung mga balances in retained earnings nung CP Inc. ay nag-purchase kay S-Inc. The total net asset will be 120,000, 130,000, and 150,000. We will add the share capital and the pre-acquisition profits to get the net assets. Percent stake of 10,000, 10%, sorry, on January 1, 2015, 15% on January 1, 2016, and 30% of January 1, 2017. To get that percent stakes, number of shares divided by total share times 100. Kumbaga, 10,000 divided by 100,000 times 100 is 10%. 15,000 divided by 100,000 times 100 is 15%. And 30,000 times 100 times what? 30,000 divided by 100,000 times 100 is 30%. Share of net assets is 12,000 for January 1, 2015, 19,500 for January 1, 2016, and 45,000 on January 1, 2017. Ito dito naman yung net assets multiplied by the percent stake. 120,000 times 10% is equals to 12,000. 130 times 15, 150 times 30%. To get the goodwill on combination, notice na meron itong letter A and letter B. That is because ito yung nasa under ng original IFRS, yung kanina kong binanggit. Ay, 15,000 minus 12,000 to get the 3,000 goodwill on combination. 40,000 minus 19,500. Correction, this should be 20,500. 75,000 minus 45,000 which is 30,000 to get the total of goodwill on combination of 53,500. The group's retained earnings at December 31 can be calculated as followed. Parents retained earnings 120,000. Share of post-acquisition of S Inc. 10% times 80,000. Ito yung retained earnings ni S Inc. minus 20,000 yung 20,000 dun sa pre-acquisition profits niya, which is total of 6,000. 15% times 80,000 minus 30,000 to get 7,500. 30% times the total of 80,000 minus 50,000, which will be 9,000. To get the total sum of 142,500. The non-controlling interest at December 31, 2017 is 81%. To get that, 180,000 times 45%. Under the revised IFRS 3, aggregate of fair value of consideration transferred 30,000 with a total of 75,000. Parent is 75,000. Notice na pa kaliwa naman yung pagkuha ng total. NCI at acquisition date fair value of 112,000 from the NCI na 45%. To get 250 times for 45%. Shucks naman ito. Fair value of previously held stake 62,500 from parent company kasi previously held stake na ni Tito. 250,000 times 25%. Yung 25%, ayun yung Yeah, yung 25% ay yung na-acquire ni acquirer from the year 2015 and 2016, which is 10% and 15% respectively. Fair value of S Inc. as a whole, to get that, add all the aggregation to get the fair value of S Inc. as a whole. 75,000 plus 112,500 plus 62,500 is equals to 250,000. Yung sa NCI, 112,500, ayun na yung pinaka-fair value ni S Inc. as a whole. Sa parent naman, 75,000 plus 62,500 is equals to 137,500. Kapag a-add din mo to si parent at NCI, 250,000 din ang sagot. The net assets acquired, shared capital, 100,000, and the pre-acquisition profits of 50,000. Yung pre-acquisition profit na 50,000, ayun yung balances in retained earnings kanina sa illustration. Pagsasamahin din natin yung share capital at yung pre-acquisition profit to get the 150,000. Shit, paano yun nakuha?
Ano yun, ano yun?
Sorry po, sorry. Ayun, 100,000 times 55% is equals to 55,000. Tapos yung 45,000, 45% times 100,000 is 45,000. And next, the group's retained earnings at December 31, 2017 can be calculated as followed. Parents' retained earnings is 120,000. Gain on remeasurement on previously held stakes. Since nga ni-remeasure natin yung ang per share ni SE, since ang sabi nga sa illustration, the 10,000 shares times 250 is equals to 25,000, at ilalas natin yung cost na 15,000 to get the 10,000. While yung 15,000 shares times 250 minus 40,000 ay magiging negative 2,500. Ilalas natin yung 2,500 kay 10,000 to get 7,500. Share of post-acquisition profits of S Inc. or the 55% times 80,000 minus 50,000 will be 16,500 to get the total of 144,000. The non-controlling interest at December 31, 2017 is calculated as follows. NCI share of net asset at acquisition date is 67,500. 150,000 less 82,500 to get the 67,500. The NCI share of goodwill on combination, which is 45,000, to get that 100,000 less by 55,000. NCI at acquisition date fair value is 112,500 or the 65,500 plus 45,000. The NCI share of those acquisition profits, 45% times 30% is 13,500. Yung 45%, ayun yung non-controlling interest pa. This NCI at December 31 can be also calculated directly as follows. NCI's share of asset at December 31, 2017 is 81,000. 45% times 180,000. Yung 100,000 yung common share ni Sing at yung 80,000 is the retained earnings. NCI share of goodwill, 45,000. We will add this to get the 126,000. Same as na nakuha doon sa pinakaunang calculation. Dito naman ni-aggregate naman lahat ng non-controlling asset. Ito directly na. So to get the consolidated statement of financial position, the consolidated financial statement of financial position as of December 31 is as follows. Consolidated statement of original IFRS, property, plant and equipment of 300,000, same as the revised IFRS 3. Goodwill on combination is 53,500 and 100,000. The current asset is 220,000 for the both original and revised IFRS to get the total asset of 573,500 and 620,000. The share capital of 200,000 for both and old IFRS, retained earnings of 142,500 and 144,000, with the total of 342,500 and 344,000. Non-controlling interest, 81,000 yung from the computation of 45% multiplied by 180%, and yung 126 naman from the calculation above this consolidated statement. The current liabilities are 90,000 plus and 90,000. Add the 40,000 from P Inc. and S Inc. The non-current liabilities of 60,000 respectively to get the 573,500 and 620,000. Yun na po, sir.
Okay. Yung step acquisition, bago ka nagpakita sa amin ng mga tables and computations, may mga narrative paragraphs doon sa umpisa, no? Uh, Meron yung sinabi ka sa fair valuing previously held stake. Ito yung ano, no, one meeting na mention ko na parang hindi pa tayo ata nakakakita ng computation ng goodwill na bukod sa fair value ng consideration ibinigay ng acquirer plus yung fair value ng non-controlling interest, meron ding ila-add yung fair value ng previously held interest ng acquirer doon sa acquiree. Tatlo yun eh. I-add mo bago mo i-subtract yung yung fair value ng net identifiable assets ng acquiree to get the goodwill. Ngayon, natatouch na niya, no, yung ating hinahanap one evening. Tapos, matapos mo, Ray, na i-present itong narrative, meron kang illustration, no? Illustration. Okay. Ilang tables yan? Dalawang table, ano? Patingin nga, ibaba mo pa nga sa ano? Ibaba mo. Yan. Yan. So, ang retained earnings ni P, 120, no? Samantalang kay S, 80,000. Now, kapag i-add mo, 100 plus 80 plus 50 plus 50, nagkaroon lang ng typographical error. Meron diyang typographical error, ano? Yan ang current liabilities. Hindi dapat 50,000 yan. Dapat yan 20,000. 20,000. O, i-add mo ngayon. Di ba tama? 250. 20,000 yan. Typographical error yan. Typographical error. Tapos, meron akong tanong sa iyo. Punta ka doon sa goodwill on combination. Goodwill on combination. Yan. Ibaba mo pa, konti. Sige, baba pa. Teka, lumampas na ito. Yung sa taas ng double I. Taas ng double I. Yan. The non-controlling interest at December 31, 2017 is 45%. So yung 55 nakuha na ni acquirer times 180. Paano nakuha yung 180? Train.
Sir, ang pagkakaintindi ko po kasi do'n yung 100,000 na common shares plus retained earnings ni S Incorporation po para po ma-get yung 180,000.
Hindi. The non-controlling interest at December 31, 2017 is, di ba ito itong 45,000 pag-aari ito ni NCI, di ba? NCI. Now, itong 180,000, ito yung ano, tawag dito ba? Ito yung net assets, net identifiable assets, fair value. Ito yung ano, fair value ng net identifiable assets ng acquiree. Di ba meron ka dyan table na ano, yung financial position ng P&S company? Ano ba natin na kinukuha yung net assets? Pakita mo nga, hindi, sa taas yun. Sa taas. Eh, pinakita ka sa amin ano, yan ata. Yung may mali, yan, sige. Ha? Kasi ang total assets daw ng acquiree ay 250. No? Yan ang kanyang total identifiable assets. Ngayon, tanggalin mo diyan yung yung ah tawag dito, yung liabilities. Yeah. So 250 minus 50 minus 20. Eh, 250 minus 70, 180. Ayun yun. Ayun yung 180 nag-appear dito. Ito yung net assets ng no, net identifiable assets ng acquiring. Total assets na 250 minus all the liabilities, ang makukuha mo 180. So ang 45% noon na 81,000 ay yun ang non-controlling interest. Base sa ang net uh, sa fair value ng net identifiable assets ng acquiree. Okay? Yun yun, 180. Ngayon, ibaba mo pa, ibaba mo. Yan. Ay, yung nga ba? Hindi, ibaba mo. Ibaba mo, yan. Yan. May sinasabi ka dito, the non-controlling interest at the acquisition date fair value. Iba naman to. Fair value ng NCI. Yung isa, the NCI value being measured at its proportionate share sa fair value ng net identifiable assets ng acquiree. Ito naman ay the fair market value of an NCI at the acquisition date. Acquisition date fair value. Okay, dealing by that, ina-acquire natin dito yung yung ordinary share ni S company, Saan nakuha yung 250 range? 545% of 250,000. Sa kinuha yun.
Sir,
So,
ayun po ba yung yung total nung sa statement of financial position ni S company? Kung sa total niyang 250,000. Doon po, yun po kasi yung pagkakaintindi ko dito.
ayun ang total assets yung sinasabi mo. Total assets. Ito. the value of non-controlling interest at the acquisition date, fair value. Hindi ba ang in-acquire natin, ordinary share ni S company? So dapat yun, meron yung fair value. Dapat yung may fair value. At 45% noon, ay kay NCI. Okay, iakyat mo ng iakyat. Hanapin na natin yung 250 yan. Iakyat mo, akyat. Teka, sandali. Pa tayo lumalampas. Baba mo, ayan. It is the policy of the group to measure non-controlling interest at acquisition date fair value. Fair value raw, non-controlling interest, acquisition date, fair value nung ina-acquire. Ibang ina-acquire, di ba yung ordinary shares ni acquiree? On January 1, 2017, yan ang date ng date of acquisition. The fair value of the common shares of S, 2 pesos and 50 centavos per share. Ilan ba yung common shares ni S? Di ba 100,000? Di ba? Ayun, nasa taas. 100,000 at 1 peso. Common shares of 1 peso each ni S. At 1 peso, 100,000 shares. Kung 1 peso, edi 100,000 shares. Naging 2.50 per share noong date of acquisition, January 1, 2017. 2.5 times 100,000 shares equals 250,000 pesos. Yun ang hinahanap natin. Rain, naintindihan mo na.
Apo, sir.
Oh. So, hanap pa tayo dito ng itaas mo ng kaunti, Itaas mo ng kaunti. Ay, taas nga ba? Baba pala, baba. Yan. Yan po, sunod. Yan. The parents, yan? The group's retained earnings at December 31, 2017 can be calculated as follows. Yung doon sa parent is 120 plus share in the post-acquisition profits of S. Yan. Plus 6,000 plus 7,500 plus 9,000 equals the consolidated retained earnings as of December 31, 2017 is the parents 120,000 plus shares in the post-acquisition profits of S Incorporated. So the total is 142,500. Plus, I'm not expecting you to explain kung paano nakuha yung 6,000 na yan, kung paano nakuha yung 7,500, kung paano nakuha yung 9,000 na yan. Kasi medyo mahirap na technique ang ginawa ni author, Pero mas madali di yan na technique para makuha mo yung 142,500. Remember, kung ano yung i-add mo doon sa retained earnings ni parent na 120,000 para maging 142,500 yan. Babaguhin mo ang computation. Yung computation na mas maliwanag. Yung computation na yan, mahirap yan, ma-imagine, kung paano naging 80,000 minus 20,000, 80,000 minus 30,000, 80,000 minus 50,000. Ngayon, merong mas madaling computation dyan. But before presenting the alternative solution, ipakita mo sa akin, Rain, yung ano, yung illustration, no? Yung illustration sa taas. Yan, yan. So, ano sinasabi dyan? So, lahat-lahat 100 shares, ano? 100,000 shares lahat-lahat ang pag-ari ni S. Such that, kung nakakuha si acquirer ng 10,000, hindi 10% kanya. Tapos kumuha uli siya ng 15,000, hindi 25% na nakukuha niya. Tapos sumunod, kumuha pa siya ng 30,000. Oh, hindi, nung nakuha na niya yung 30,000, naging 55% ng hawak niya. Tapos, alam naman natin, yung retained earnings, accumulated profits and losses. No? As of, kapag ikaw ay nag-net income for a year, i-add mo yun sa retained earnings, lalaki yun. Kapag ikaw ay nag-net loss for a year, ididagdag mo yun sa retained earnings. Liliit ang ano mo, retained earnings. Mo, doon sa table na yan, as of January 1, 2016, ang retained earnings mo ay nag-accumulate na sa 30. Pero noong 1 year ago, 20 lang siya. So magkano in-increase? 10,000. So malinaw na yung 10,000 ay yun ang net income as of December 31, 2015. Na yun din ang January 1, 2016. Okay. Noong January 1, 2017, ang retained earnings mo ay 50,000. Samantalang a year earlier, 30,000 lang. Magkano ang difference? 20,000. So yung 20,000 na yun, inang net income as of December 31, 2016. For the year, from January 1, 2016 to December 31, 2016. Ibaba mo konti. Ibaba mo konti. Okay. Okay. Ang retained earnings ni S noong December 31, 2017 ay 80,000. December 31, 2017 yun, 80,000. Itaas muli. Itaas mo. Sige, taas. Yan. Samantalang noong January 1, 2017, meaning December 31, 2016, nasa 50 lang. So magkano itinaas? 30,000. Yung 30,000 na yon, ilang net income from January 1, 2017 to December 31, 2017. Okay. So, kamalinaw na, no? Kung magkano net income. Ngayon, as of December 31, 2016, magkano net income? 50 minus 20 equals 30,000. No. Noong December 31, 2016, magkano ang net income? 50,000 minus 30 equals 20,000. 20,000, ha? Kaninong income yon? KS. Doon sa 20,000 na yon, as of December 31, 2016. As of December 31, 2016, ha? Magkano ang income ni S? 20,000. So sa 20,000 na iyon, as of January 1, 20, as of December 31, 2016, ang pag-aari lang ni P sa S ay nasa 25%. 25%. So kung ganon, doon sa December 31, 2016, at 20,000, ang 25% noon ay pwede mong i-attribute, ibigay kay P. Magkano yun? 5,000. 5,000. Ngayon, as of December 31, 2017, magkano ang income ni S? 80,000 minus 50, di ba? 50,000 minus 50, 30,000. So sa 30,000 na yon, magkano ang pwede mong i-allocate kay P? 55%. Okay? As of December 31, 2017. Kasi noong January 1, 2017, na 55% na si P. So 55% ng 30,000, pwede mong i-allocate yung 16,500 kay P. Kay P. Punta naman tayo doon sa December 31, 2015. December 31, 2015. Magkano ang income ni S? E di 30 minus 20, 10. Doon sa 10 na yon, pwede mong i-allocate yung 10% kay P. Kasi as of December 31, 2015, 10% ni S kay P. So kung 10% ng 10 ay kay P, magkano yun? 1,000. 1,000. Ngayon, i-add mo ngayon yung 5,000 na nakuha natin kanina. I-add mo rin yung 6,500 na in-add mo kanina, na kinumpute natin kanina. I-add mo rin ngayon itong 1,000 at i-add mo ngayon yung sinasabi nating 120,000 na retained earnings ni P. Ano lalabas? E di yung 142,500. So, mas malinaw na analysis yon kaysa na analysis na nakikita mo sa libro, no? Okay. So, minsan, practice kayo kung nasundan niyo yung aking sinabi. Oo. So, nandyan lahat ang mga numero, no? Nakukuha mo yung 142,500. Kasi magtatanong kayo, Sir, paano nakuha yung 140,000? 142,500. Yun yun. Oh, class, may tanong? Rain, may tanong ka ba?
Sir, wala na po. Yun pong ni-correct niyo po yun yung saan itatanong ko.
Wala na. Alin? Yung
Yun nga po
50,000?
sa 250,000 pati po dun sa 180,000.
Oh, so, yun, no? Kung paano nakuha yung mga numero yan. Yung ibang numero, mali pa. Typographical error. Oh. Ang susunod na number ay, as usual, buksan ang mga camera. Oo. Nasaan si Laurance? Laurance, ikaw naman. Photographer namin.
Sige po, sir.
Buksan ang mga camera. Okay. Oh, yung mga sira pa mga camera ng mga are. Oo. Oo. Sige. Pagandahan ng smile, ha. Smile. Si Patricia, si Rose Ann ay magpakita ng smile. Okay. Lawrence, bilang ka na lang. 1, 2, 3.
1, 2, 3, smile.
Okay. O, yung ano, yung dalawa, nandun na naman. Oo. Okay, class. Bye-bye. Good night. Till we meet again next week.
Thank you po.